Hi, and welcome to the Trading Pit, personal investing tools and techniques for the active trader and investor. I am Lundy Hill, and this is not financial advice, and past performance is not necessarily indicative of future results. Here are the charts that caught my attention for the week ending May 16th, 2025. First up is the S&P 500 mini chart. Last week, I highlighted, here it is, I highlighted the trend line break in ES futures. This week started with a pop. Monday showed a strong follow through of the trend line break with a breakaway gap opening. The gap open was very strong and was above the high of last week. That is a big sign of strength. ES and the stock market as a whole finished the week with a pattern 9 trend indicator up. This is another one which we had one a couple of 2 to 3 weeks ago, which carried prices to the trend line break and into congestion, and now we have a second one coming out of that congestion higher. I'm expecting a price rally from here. I think we'll see new highs. Next, let's look at gold. Here's the daily chart of gold. Last week I highlighted the gold clear out pattern. You can see it 5 days ago as a possible up move coming. I did express concern that the close of that clear out bar was not closer to the high of that day. I said this might be the only caveat to this clear out bar, and that turned out to be a valid concern as gold fell over $200 or over 6% this past week. Where on Thursday, the second bar from the end, it had another clear out bar. This time it was the bar closed on the high of that bar. Friday, which is a ultra strong signal, Friday was a reaction down bar with a long tail on the downside, signaling buyers coming in. Is this the low of the down move off of all-time highs? Time will tell. A breakout up could be a good buy signal, a 30-minute breakout up or an opening range breakout, a range breakout, a volatility breakout. Next, let's go down to the 4-hour chart. Here we have a clear, valid down trend line across the highs of the last couple of days' action on this 4-hour chart. That trend line down was broken this week. And the last few days, or the last few bars of the action, was a retest of that trend line. Note the pullback almost exactly to the high of the low bar. This was one of my father's favorite buy signals. You buy at the high of the low bar with a stop right below that low. Gold is clearly in the buy zone. It's in the bottom quarter of recent price action. And the largest thrust of last week is still, but the largest thrust of the last week is still down, but that's barely. So be cautious. Next, let's look at natural gas. Natural gas did in fact meet selling pressure. I highlighted the breakout of last Friday where it poked its head above the lows of those two prior pivot bars, which I've highlighted with the top green line. And it in fact met selling pressure there, and that sent prices down all week, 5 days in a row. So another pattern 9 trend reversal signal there. The buy zone is now much lower. Well, not much lower, but it's probably around the 320 area. I'm still thinking that gap up off the low, off that spring low, and the dramatic follow through up to these pivot highs, I think that's going to hold, and I think prices will go higher, but I could be wrong. Next, let's move on to soybeans. Soybeans broke pivot highs around the 1080 area, and then prices fell, forming an upthrust. Note the narrow range bar which formed at the pivot high, a narrow range and a close well off the bar's high. This is not a convincing breakout and probably a sign to cover longs and to get in a low risk short position. And that's exactly what happened. Prices fell right back to the support zone of the prior pivot low around 1050. This is the congestion of that prior pivot low. However, in 2024, I don't recommend to buy because if you look at 2024, the last week of May had a similar upthrust and a move lower. That move lower carried prices down to 950 range, and the downtrend lasted over 2 months. And if wheat is any indication of what's going to happen in the overall grain market, I think prices are headed lower as wheat made multi-year lows this week. Finally, let's go to cocoa. Cocoa was a huge mover this week, breaking out of congestion decisively. After bouncing off a multi-year channel low, which I've highlighted in this shaded blue area, with the blue line being the lower channel line around 7,600. Price, however, stalled around 9,000 for a couple of weeks. This week, cocoa had a rally out of that congestion zone of about 22%, carrying prices above 11,000 briefly. I think currently cocoa is in no man's land, right in the center of this multi-year channel. We see the high of the channel is just shy of 14,000, and this mid-range is right around 11,000. I think a multi-day reaction to Thursday's close is warranted here. Note that the sellers came in, looking at Thursday's action, that's 2 days ago, not the last bar, but the second to last bar from the right. Sellers came in off the highs of that day and sent prices back down off those highs. So all these people who had sells in and sold at that level, they need prices back down below the high of Thursday so they can buy back their shorts. And if prices do get back down to that level, they will be buyers, probably big time. And this is also somewhat close to the pivot lows of 3 and 5 months ago. That's the black line in the center of the chart there. I haven't shown the pivot lows, but I can zoom out in another chart and show that. From this, maybe prices will head to the top of the channel around 14,000 from this reaction low, I think, which could take a couple of days. I think prices could head to the top of the channel in the 12, 13, 14,000 range. That would be a 20 to 30, 35% move higher. Of course, past performance is not necessarily indicative of future results. I hope you enjoyed this information. I hope you got something out of it. If you did, please like and subscribe and leave a comment for what you liked. Thank you.